Good morning, everyone, and welcome back. Today is the first trading day of January 2021. We're excited to get into the markets and see what we've got in store for us. I hope everyone had a long and restful holiday and is excited for what we have to bring here. So before we get into it, I will just remind everyone that all of the information, commentary, and opinions expressed in this or other websites or on any other social media platforms or in any media format reflects the personal opinions, viewpoints, and interpretations of the employees providing such comments and is not to be considered a description or an offer of advisory services by Harvested Financial. The opinions expressed are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security or investment product. It is only intended to provide education about the financial industry, and in no way is the content on this website meant to convey investment advice, performance data, or any specific recommendation. Harvested Financial employs multiple methods of analysis and security selection to create client portfolios, which are not discussed in their entirety here. All investments carry the risk of loss, and users should discuss any decisions with their financial advisor. Past performance is not a guarantee of future results. And here we go. We are looking at the markets today. And what do we have on this bright, shiny Monday morning? Well, all-time highs again. So we've got all-time highs in the SPY, up 19 cents today, about 5 basis points. Qs up 12 cents themselves. And the IWM is up about 55 cents itself, 28 basis points. So actually, futures were up a little bit more this morning. It's come in a little off the highs of the overnight session, but what we are looking at is some continued bullishness across the overall market, and specifically in some names like Tesla. So I'm going to pull up Tesla today and talk about some strategies, because while we're seeing all-time highs in the market, we're seeing stratospheric highs in Tesla. It was up over 700% last year. So there's a lot to think about in Tesla, especially if you're a long holder and have been holding on for quite a while. You're sitting on some pretty nice gains. So what I'm going to look at today is how to think about managing your stock position in Tesla given the all-time highs. We're trading up 22 bucks today. That's 3%. Stock is right around 727.5. So I'm going to pull up my trade hawk and get into how to think about Tesla. So, like I said, stock's up tremendously this year. And many ways you might be thinking, wow, I'm sitting on some really nice capital gains. I'm sitting on some really appreciated stock. Maybe you don't yet want to sell it and incur the tax cost of selling that appreciated stock. Maybe you just want to kind of take a breather here and protect a little bit of what you've made this past year. So options provide an amazing way to do this. And one of the most common strategies that we use to protect gains and sort of lock in the current valuation that you have is a zero cost collar. So we're going to get into a zero cost collar by selling an upside call and buying a downside put, which ultimately neutralizes your overall position. So what I'm going to do is, well, let's just clear this and we'll go out and select it ourselves. So, I'm looking at Tesla out in Feb 2019. So here we are, and stock is trading right around 727. So in this case, we're going to think about putting a collar around the position at the 730 strike. So the 730 strike is right here. Look at the price of these options, whopper. So we've got a $72 call and we've got a $75 put. So interestingly, the 730 call, a little less than the 730 put, putting parity actually right around where we are here. This option is only about 45 days out. So we are going to, instead of just buying the call and the put on the same exact line here, we're going to look for something that can get us a zero cost position. So as the name implies, in a zero cost collar, we're looking to do this for free. So we're looking to collect the same amount of credit on the call that we sell and use that to finance the debit purchase of the put. So by exchanging our upside and selling that call, we can use those funds to buy the put. So where I'm going to look in the markets right here, so like I said, going out about 45 days, I am going to be looking at, well, let's see what this 735 call will get us. So with that trading around just under $71, where can we buy a put for about $71? Well, it looks like that 725 line is almost exactly the same price, maybe slightly cheaper. So what this does is it gives me a little bit of a staggered collar here. I'm going to be buying the 725 put. So I'm going to buy that, pay around $70 for that, 70.01, and I'm going to sell the 735 So I'm going to collect, a little over 72, pay out a little over 70. Stock's moving around quite a bit. We're already up $2 compared to where we started this. Actually, since I started this trade, we're up over $5 since we started this session. So things are moving around a little bit. That's always why it's important to execute cleanly and succinctly. And something Harvested Financial excels at is execution quality. But overall, what we're trying to do is establish a little bit of a position for approximately zero cost. Right now, this is flipped into credit territory, but the same kind of logic applies. So I'm going to show you first what this would look like just with the options position. So you can see we're entering into this trade for about a 225 credit. That's moving around a bit. You can think of it, it's generally around zero cost, however. So the line that we're looking at here is the P&L chart. In a lot of ways, this should look exactly like the opposite of a stock P&L chart. To the extent that every dollar Tesla goes down, your options position is going to make money. Every dollar Tesla goes up, your options position is going to lose money in a pretty linear straight line. So as your stock value is going up, your options positions are going to lose money. And as your stock value is going down, your options positions are going to make money. This neutralizes the position overall and lets you lock in the gains and lets you do it at a zero cost basis to you. So what we'll see here is once I add the stock leg, it's a stock leg, and the overall profile changes quite a bit. This looks much more like a simple call spread. And in reality, if you were able to achieve a pure zero cost, this would actually be completely flat. So, because we enter it for a little bit of a credit, on the upside, we are going to make a little bit of money, and on the downside, we are going to lose a little bit of money. But overall, the goal of a zero cost collar is to get into this for zero position and protect your investment that is appreciated without incurring those capital gains. So a lot of interesting things to think about with Tesla at all-time highs here. How do you manage that position going forward? We're going to be talking about a lot of these kinds of things this week. So stay tuned every day, mash subscribe. You'll enjoy the content coming out of Daily Bread every day. And thanks.